Well, hello and welcome to this weekend's Trade Tracker update. Today is Sunday. It is December 21st, 2025. And man, it's been one heck of a week. And I'm really excited. I have a lot to share with you today. What I want to do is first off, just kind of explain to you kind of big picture. What I'm doing here when I first start off showing off the larger term time frames and then ultimately to the shorter term time frames. I'm not trying to predict anything. What I'm doing is putting ourselves on the highest probability side of our trades. Okay. What I found is trading with the probabilities works out extremely well. I have the Apex multiple time frame trading strategy that I developed. It's an algorithm I can make available to you. It really helps keep us on the right side of the trade. So what I'm going to do today is start off with the big picture, just kind of show you where we're at, on the Nasdaq, a bigger time frame, and then go down to the smaller time frame with our day trading system. Please make sure you click the subscribe button on my YouTube channel so I can keep you informed of everything going on. I'm going to be opening up the actual Apex Traders Club in January for members that want to be kept more abreast during the week with we'll do some live trading and some daily updates and keep you more informed day to day and more real time as far as what's going on. So it's going to be very, very exciting what we have cooking here for you. A lot of exciting things to show you. And it's just been a lot of fun this week. It's been another good week. Not every week is profitable, but the last few have been extremely well. We've been fortunate to be we're on the right side, but the proper side, but the highest probability side. And that's the side, as long as you work the probabilities, generally you're going to win, more than you lose as long as you manage your risk. Okay, if you've seen this chart before, I'm just going to start off here just because I started here the last few videos. This is kind of the longer term NASDAQ. The reason I like the NASDAQ is because it has the most volatility compared to the S&P, Russell 5000 or the other indexes. There's plenty of volume, plenty of liquidity, and plenty of movement. So I like to focus on the NASDAQ for that reason. As you can see here, we're still on our channel 7 up here. The NASDAQ going back in 2019, working these channels. It's been dropping down. Now we're up here. The all-time high was 26,655. And we can see we're still, of course, in this channel number 7 here. And we're anticipating that this is going to hold here. The support line there, we've been falling here the last week or so. But we're going to bring you up to speed as far as what's been happening and if there's been any kind of a change here. All right. Okay, the next chart I want to show you is more of a zoomed in. This is the 42 momentum tick bar. I like the tick bars because it takes time out of the equation. All that really matters when you trade is price and momentum. That's the two biggest factors. Time really doesn't matter. The minute bars, they're okay in some cases, but for the most part, when you're looking at trend identification, I found the tick bars, momentum bars to be the best. It's pure price action and momentum. As you can see here, of course, the green is positive, red is negative. These are my fusion indicators. I can get those to you as well if you like to help you keep on the right side of the trade. We talked about, how the last couple trade tracker videos, how the momentum, when it gets near 500 points above this 200 period moving average, it tends to want to drop. And then we start seeing some weakness up here. And we talked about the last couple trade tracker videos, how we started to see some weakness. We saw the moving average cross here, which brought the 200 period below the 500. That's just one piece of a much larger pie, but something to look at. And sure enough, we started seeing a sell-off here. It gets near 500 points below and pulls up a little bit. 500 points below, pulls up a little bit. But what happened here in midweek, when it starts falling like this, a lot of traders, the question is right here, what I have here in yellow, right? How far can this go? And what's the probability, right? When you're trading down here, we really don't know how far this is going to go. Is it going to turn right away? Is it going to go another 500 points, another 1,000 points? What's going to happen, right? So we need to always look at our smaller term time frame to see when this is going to turn to put us in more of a higher probability probability move, right? We can see the momentum here was slowing down a little bit because it's not as far as it was here, but that by itself really doesn't tell us anything. We got to look at our smaller time frame here and see, is this going to go down further or is that going to turn right there? And we don't know until we look at this next chart, which is, you've seen this before in our other videos. And this chart here has been very interesting. We have our up channel here. This is going back here at end of July. That peak right there, this whole uptrend here stayed intact up until October 29th. We hit the all-time high. And there's been another volatile ride down, just like it was a volatile ride up, right? We just connect our tops and our bottoms to make our channels here at what might seem like a very unorganized market. It's actually very, very well organized when you're able to get the right time frame and the right charts. It's a very organized market. All right. These professionals, they're not just guessing, right? They know what they're doing. We're just trying to be on the right side that they're on. So as you can see here, right, this is the support line here as it's been dropping, and that's the resistance line on the top. This was some news events here. It blew through our resistance line here, okay? And then our last trade tracker video, our 2 weeks ago was at December 7th. And we talked about in that video in depth about how we anticipated a turn here. We did not call a top. That's not what we did there. We just saw some indications. If you go back and watch that December 7th video, we talked quite extensively of why we felt it was going to turn there. It was a very high probability it was going to turn, and we had a lot of reasons for it. And if you go back and listen to that video 2 weeks ago, you hear all about it, all right? Last week, December 14th, that white circle right there, that's where we were last week, last Sunday. We talked quite extensively and during that video why we felt the market was going to continue to drop. We had some very good reasons for it, all probability based. It's not just, my thoughts or what I think is going to happen. It's just 100% probability. Now, probabilities are not 100%. They don't always work out our favor, but it's like Vegas, right? Vegas, in the casino, all those different table games they have, and craps and roulette and poker and blackjack, they only have a few percent odds in their favor. It's 3 or 4% odds in their favor. That's it in a lot of those table games. But over many bets and over a long period of time, they clean house. They are that's why they call it the house wins, because over time they have the edge and they win. They don't win every bet, right? There's some gamblers that go in there and they have some pretty big days and they win and walk out a big winner, right? But it's not what happens all the time, obviously. So we just want to be like the casino. We want to put ourselves on the higher probability side of the trade, number one. And number two, we want to always manage our risk. We want to have our stop losses in place. And I'll touch on that near the end of the video, what we did there. So last week, we talked about how the market high probability was going to fall. And then sure enough, it fell quite steep, okay? And then what happened on Wednesday, going back over here, right? We're watching, charts like this as far as it falling. And when you're looking at a chart like this, right, we get a lot of emotion coming in, and a lot of people who are excited about the market's going to continue to fall and drop, and they just hope, wish, and pray that it keeps falling if that's the side they want to be on. But what do you actually look at there? Well, I'm going to tell you exactly what we looked at to help us turn this around. What we do is, in these kind of cases, we use what's called Fibonacci. And if you're unfamiliar with Fibonacci, you can Google it or look it up on your AI. It's very, very interesting. Fibonacci, I'm not going to get and explain everything, what it is and how it works right now. You can do that on your own, and we'll do that in some of our breakout sessions, next month. But basically what it is very simple. All we do is we are right here, middle of the week, right? And I just wanted to know for myself, what's the probability of this falling, and how far could it go, right? Because we had a really nice drop here for basically 2 weeks. And nothing lasts forever, right? That's always going to drop, but we don't know when it's going to drop. So what I did was I just did a quick Fibonacci analysis. What we do is we take the low here, which was 24,160.5, and then it's the most recent low, right? The most recent high right here, 26,124. So the fib low right here, 24,160. The fib high, 26,124, and all we do is break out the Fibonacci ratios. The 50% ratio is right here, 25,142. We have the 61.8. This, they call this the golden ratio because it's the one that where the turns turn at the highest probability. I've read some traders say it's as high as 70, 75% chance that when the market hits that from a high, it's going to want to reverse. It's not 100%, but it's over 70%, a lot of traders say. And then, of course, here's the 23.6. Now, what does that mean? Well, if we were right here on Wednesday, December 14th, okay, what that means is as the market falls, okay, we want to wait and see if this gets down to we're going to keep going short until it gets down to 24,910. Why 24,910? Because that's 61.8% retracement from this high. And that is a Fibonacci golden ratio. It's a very, very high probability of support. Out of all the Fibonacci numbers, that's the number one strongest area for support. What does that mean? That means when the market falls, it's a very, very high probability, upwards of 70% plus, that the market's going to want to turn there. Does it have to turn there? Of course it doesn't have to do anything. But we want to place our trades accordingly. We want to start lightening up our positions, okay? And we want to be getting ready to go long if the market, in fact, does start to turn. Well, you can see it went down. It hit a low here. If I put my cursor on it, it hit the low of the 24,887. So it's very, very close. 24,887. The golden ratio is 910. So it tested it, right? It stuck its toe down there just a handful of points just to see if there were going to be any sellers there. Now, what's interesting, if there was a big selling explosion to the downside here, what that would tell us is then for many, many weeks moving forward, we'd be in for a very strong bearish move well into this channel moving down. Okay. That's the line in the sand right there. Okay. Since price went down there by the 20, 30 points, whatever it was, and it got rejected, meaning that there were no sellers there, pretty much all buyers, and that's why it spiked up. That tells us that this uptrend now is still in place. So this uptrend over here, when it was going up, with this retracement coming down, now we're into another possible uptrend here. So as of Wednesday, December 17th, due to this Fibonacci number of 24,910 and the market exploding above that, okay, is telling us that the market now has a very high probability as of Wednesday of continuing an up move. So going in tomorrow and Monday, we're going to be switching from a short bias to a long bias. What do? We go down to our multiple time frame, our trading system, and look for the exact entry on the 1 minute chart or the 42 tick chart. But I'm just giving you here kind of the bigger picture here. Now, how far can this move up? Well, the first move up is what's up to the 50% retracement right here, 25,142. If it hits that, then the next target, it's like a magnet. Then it wants to go to this one here, the 38.2, which is 25,374. And the ultimate target is 25,661, which is a 23.6 retracement. All right. Well, you can see we almost got there. So coming into Monday, it's a very high probability this market's going to certainly want to tag this 25,861, and we're at 25, almost 25,600 right now. So another 80 points up is an extremely high probability we're going to hit that. And then probably we're going to most likely, with this momentum, the way it's bouncing off that golden ratio, we could certainly see it try to test this high over here, the fib high of 26,124. And then this yellow line that we talked about a couple of trade tractor videos ago, which was our resistance line. So, going into next week, we're anticipating, based on probability, that the market's going to want to go up right here. I mean, anything can happen. Of course, it could turn tomorrow and go right down. But the probability is to the upside. Okay, so what do? Look at one more chart over here. Another kind of a larger term chart, right? This is also the same 144 tick, just a different picture. Here's our moving averages, right? We have our two long moving averages, our 500 period and our 200 period. And then we're pretty much together here, okay? And this is a big test. When this comes down in this bearish move here, okay? And what we want to see, is this going to hold or not, right? Where I have that white rectangle there. Is it going to hold with those two moving averages Plus, we have our golden ratio down here of 24,910. Well, we can see what happened, right? It just tagged the 24,910, went down about, I don't know, 20 points or so, whatever that was there, and just to see if there were sellers there. And like I said, if there were a lot of sellers there, this could have exploded down to the downside. But because it didn't, it rejected it big time. It failed that breakdown right on Wednesday, December 17th, and shot up. So this is telling us now we're in a positive move here. Right? We can see our fusion candles now have turned green again, and we're once again above these moving averages. So this is a bullish move here. Now, how do we know when to get and actually trade this? Well, that's when we look at our trading system. This is the Apex multiple time frame day trading strategy. This is on the I think last week I showed you the 1 minute. This is on the 42 momentum ticks. Those are the two charts we trade, the 1 minute and the 42. So since I showed the 1 minute last week, I'm going to show you the 42 tick chart this week. Okay, December 18th, right? That's as you recall, that's over here, right? December 18th, right? That's the 17th is when it failed. So the 18th is right here during this move up. Okay, now we don't just jump in randomly. What we do is we wait for our signal. Okay, right here, December 18th is right here. We wait for our buy signal. Okay, all we do is wait for this. It's all automated. It's a program system, and this is 100% automated. So then what we do is we go in here at the enter at 25,000.5. We buy 4 contracts right here at the open, right here at the open here, 25,000.5. We buy our 4 contracts. Okay. What we do automatically is we have a stop loss of 100 points always. So I always go 100 points below that is what? 24,900.5. So we always put our stop loss in first with the 4 contracts. There's our stop loss, okay? It looks like it hit it, but it didn't. I wrote here the low was 24,902.5. Our stop loss was 900.5. So it didn't hit it by about 2 points. And if it did hit it, we have rules of how we can re-enter so we don't lose out on this move. But that's for another conversation. Anyway, didn't hit our stop, so we're still okay here, all right? Now, what we do is when we put our stop in, the system automatically puts in 3 targets in a trailer, okay? Target number 1 is always 120 points above our entry. Then there's 160 points above the entry and 200 points above the entry. Now, these targets are based on volatility. So these targets are not always set in stone. They've been like this for a couple months. This is what the targets have been. But in months and years, as volatility increases significantly or decreases, these targets will change. But for the last few months, this is what the targets have been. Okay, and we'll get into that when we get into our more of our weekly videos. Anyway, target number 1 is 120. Target number 2 is 160, and target number 3 is 200. So as you can see, we hit all 3 targets: 1, 2, 3. Then what happens? Well, when target number 2 gets hit, we have an automatic trailing stop that moves up and locks in our profit on target 3 and 4. So if target 3 was to turn back and get us stopped out, we'd be out there, and also with target 4. Well, as it turns out, of course, we know target 3 got hit there. Here's our trailing stop. It stays fixed here at target 2. So we have our 4th contract, right? 1, 2, 3 came out there. Our 4th one is riding up here. So this is the trailing stop. What does that mean? If this market came down and hit that, we would be out, right? Came down, hit it, would have been out. But these are volatility based. It gives the market plenty of room to kind of wiggle around. But if it was to hit, we'd be out. Why do we get out there? Well, we want to lock in profits, right? As the market moves in our favor, we want to start getting paid. So get paid 1, 2, 3, right? And then if the market keeps moving like it did, we have a runner. So right now, this is kind of in summary what happened, right? Target 1, we hit 120 points. As you know, we trade the micro NASDAQ. Each point is worth $2. So here we made a total of 240 on that first target, right? Target number 2, we hit the 160 point profit at $2 a point. That's 320 profit. And then the third target was 200, right? That's $400 profit. And then our 5th target is still open, okay? It's up our entry rate here is 24.9. All right, right now it's at 25,598. So we're up 597.75 points on our runner. Um, and of course, that's the same $2 per point. So that's an 11.95 profit. So the way we look at this is all four of these collectively we call a trade. Each one is called a position. So position one is up 240, position two is up 320, position three is up 400, and position four is up 1195 for a total profit so far of 2,155. So that's how we stand right now. And why did we take this long trade? Well, because we only for the highest probability trade, you only want to take the longs that are going in the direction like it bounced off that golden ratio. So we knew that was a very high probability trade there. Okay. Here you can see we have another signal here. I'll move my face out of the way here for a moment. You can see we have a sell signal here. So this one worked also, right? Those are not as high probability because it's going against the move, right? I mean, you can take the ups and downs. You can take both sides if you want and trade it both ways. But the highest probability one is only going in the direction of the higher time frame, which we know turned on Wednesday, the 17th, and this being the 18th. We knew that that was a very high probability entry there. And as you can see, it worked out extremely well. Okay, so all we're doing here is playing probabilities. That's all that we do. If you want more information on this, like I said, please make sure you subscribe to these videos. We're gonna get in. We're gonna have some day trading rooms. We'll do this real time. I know it's hard, showing these trades in retrospect, but I mean, it is what it is, right? I mean, the last trade tracker I showed you what happened on the 1 minute chart. This is the 42 tick chart. Now, they don't always work out this well. Of course not, right? This could easily came down, tagged us out there, but it's still a profitable trade, right? So all we're trying to do is position ourselves so we have the highest probability of being in the right direction, right? We have no idea that price is going to go this high when we get in here, right? No idea at all, right? We got in at 25,000. Here's at 25,600, right? Nobody's going to have any idea it's going to go up 600 points from there. But if it does, we want to at least be positioned to capture some of that, right? And if it doesn't, we take a lot of profit early on to lock in some profit because usually it doesn't go like that, right? Usually it stops, fails, and comes back and stops us out. So we lock in a bunch of profit here and go on to the next trade. If we're wrong, all four contracts get out here at the stop loss of 24.9. So, there's some more bits and pieces to the rules on this. I can get you the rules, I can get you the strategy, and get you these fusion indicators. We'll get into all that in January. So, like I said, please just stay in the loop here. I have a lot of exciting things to show you, and it's just so much fun how this is working out. I'm just having a lot of fun with this, and I want to share it with a lot of you. Whether you're trading a funded account or you're trading your own capital, doesn't matter. These systems work obviously, regardless how you're trading. I do have some special ways of fine tuning this strategy for funded accounts to keep the volatility down to help avoid hitting your thresholds. But we'll get into more of that in our breakout sessions in January. So anyway, leave it at that. Have a good rest of your Sunday, and we'll talk to you again next Sunday. All right. Thanks again. Take care. All right. Bye bye.